The news that Jerome Powell, the chair of the U.S. Federal Reserve, may step down has shaken the very foundations of the financial system. This isn't just an ordinary development. It could mark the beginning of one of the greatest economic turning points in history. Friends, do you know why you should watch this video carefully? Because what I'm about to share won't just affect today. It could directly impact your decisions in the coming weeks, months, or even years. Especially if you're involved in cryptocurrencies, investing in Bitcoin or XRP, or if you follow the markets in general. The analysis in this video could help guide your financial decisions. The rumor that Federal Reserve Chair Jerome Powell is considering resignation hit Wall Street like a bombshell. So, what does this mean? Powell is the most powerful figure in U.S. monetary policy. He sets interest rates, liquidity strategies, and controls the inflow and outflow of money into the markets. His departure wouldn't just be a change in leadership. It could open the door to radical shifts in monetary policy. This rumor emerged after a post by U.S. Federal Housing Finance Agency, USFHFA, Director Bill P.T., who shared an article on his social media account. The source of the article is none other than himself. So while there's no official confirmation, serious circles are already talking about this possibility. If this rumor turns out to be true, someone aligned with Trump and in favor of low interest rates could be appointed as the new Fed chair, and that would have a direct effect on the markets. Donald Trump has repeatedly criticized Powell for keeping interest rates high, arguing that it has hindered economic growth. According to Trump, interest rates in the U.S. should be around 1%. Currently, rates are above 4%. So, if Powell steps down and is replaced by someone aligned with Trump, we could see rates slashed down to 3%. Do you know what that means? Not just billions, but trillions of dollars could flood into the markets. When interest rates fall, borrowing becomes easier, money gets cheaper, consumption rises, and investments increase. In short, a huge wave of liquidity hits the economy, and risk assets, like cryptocurrencies, could see massive gains during such a time. We're already seeing Bitcoin hitting new highs and XRP experiencing explosive growth, but this might just be the beginning. If Powell really does resign and a low-interest advocate takes his place, we could witness historic rallies in the crypto markets over the next 12 weeks. Now let's take a look at the technical analysis side. For the past 4 days, the market has closed with consecutive green candles. Bitcoin, Ethereum, XRP, and other major cryptocurrencies have all seen significant jumps. However, technical indicators are flashing some warning signs. For example, the stochastic RSI is still in the overbought zone, a typical sign that a correction could be on the horizon. We've seen similar scenarios in the past. Back in November, after several days of consecutive gains, a sharp correction followed. The same thing could happen now. That's why investors need to be extremely cautious. Panic selling or buying due to FOMO, fear of missing out, can lead to significant losses during these volatile times. And it's not just the Powell rumor supporting this rally. Other developments are playing a role too. For example, in June, the US reported a $27 billion budget surplus, the first time this has happened in 20 years. Tax revenues have surged, and this signals that the government may reduce its intervention in the markets. Additionally, the US Director of Digital Assets stated that next week could be historic for the crypto world. We don't yet know what that means. Maybe new regulations, or a major partnership announcement. But what's clear is that expectations are sky high. And in crypto, markets often move based on anticipation. But let's not forget, the current rally is largely based on a rumor. If Jerome Powell actually resigns, the market will likely have priced in the news already. But what if he doesn't? What if this was just speculation? Then the current euphoria could quickly turn into panic selling. That's why investors must remain extremely vigilant. This is where a classic investment strategy comes into play. Buy the rumor, sell the news. Right now, people are investing based on a rumor. But once the official announcement is made, even if it's positive, major investors may start taking profits. This could trigger short-term declines in the market. In the long run, however, the picture looks different. If interest rates do fall, it would provide serious support, not just for crypto, but for stocks, real estate, and all major asset classes. Just like during the 2020 pandemic, the money supply would expand, and people would turn to alternative investments. That would increase interest in digital assets significantly. Projects like XRP, which are becoming more regulatory compliant, could attract massive institutional interest. There are growing forecasts that XRP could once again reach the 3 ways Bradford 4 range. This isn't just a wild guess. It's a prediction backed by macroeconomic dynamics. Personally, I'm holding on to my long-term positions because I don't believe this rally is over yet, but I'm cautious about opening new positions, especially in derivatives and leveraged trades, because every rally is followed by a correction. It's like a law of nature. Buying on red days, being patient on green days. That's the smartest strategy right now. And most importantly, we need to make decisions based on data, not emotions. If this deep analysis and information brought value to you, please like the video, share your thoughts in the comments, and don't forget to subscribe to the channel.